Greetings, Dr. Jeffrey Scott. This is my weekend market update for January 28th, 2024. My email address is hgsidoc@gmail.com. I will respond to constructive and interesting comments in either the YouTube or via email. If you have any questions about my tools, feel free to email me. It's a funny title today. It's kind of like Worldwide Wrestling Event. Coming from one corner are earnings, big earnings. This is the earnings week of the year, or one of the beginning of 2 or 3 very busy ones. Or the Hindenburg Omen, will it be the dominant signal? And are we topping and going to sell off? So I think it's a real question. And can the earnings that are coming out this week actually beat the Hindenburg and allow us to go higher? As always, this is for educational purposes only. Anything I recommend should be considered in the spirit of education, not investment advice. I'm a doctor, not a broker. I have licenses. I have an MD. I've got board certification in internal medicine and medical oncology. But I am not licensed to tell you what to trade, and therefore anything I talk about should be only in the spirit of education. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. If you like these videos and maybe they're just a little too long for you, stocksanddocs.com. Most days I will put out a 5 to 8 minute video. Typically I'll do it late at night before, and then it'll be posted at market open. I always like to start looking at the major markets to get a sense of what worked and what didn't work this week. And pretty much it was a week of work. You could see up at the top of this are a bunch of the major market indices. The Russell 2000 is the laggard. But if you look at for the week, the winner was the Russell, even though it was flat on Friday. In fact, the NASDAQ and the Qs were both down 0.4 and 0.6. And you could see second place on the week was the S&P. Volatility was up on the week. FANG was up on the week. That's a leverage ETF. Commodities were up on the week and probably driven mostly by oil. From a sector perspective, looking at the S&P 500, the laggards were healthcare, discretionary, and real estate. If we look at the Q Edge tool, it gives me a great sense of what's happening in the market. First thing is we have improved on the buckets. So now, excuse me, 58% of the stocks in the S&P 1500 are above the midline of the Bollinger Bands, slightly bullish. This distribution is kind of neutral. You don't have a lot above or below. And if we see on Friday, 73% of the sectors were up, 57% of the industries, and 55% of the stocks. If I look back over a month, you can see mostly red. So the markets are coming out of a weaker period. Interesting. Over 10 days, improvement. Over 5 days, improvement. And over 1 day even, also improvement. So the markets look like they've improved some over the last week or two versus the prior two. Now here's a concern I have. I talk a lot about the Hindenburg Omen. The Hindenburg Omen is a signal that typically fires at market tops. It needs to be confirmed, so you need a second one within 30 days or 30 trading days. And 1 out of 4 is significant. Most of them will just have a little sideways or pullback. But the important thing about the Hindenburg Omen is there's never been a major market correction that was not preceded by a Hindenburg Omen. So to me, that is kind of interesting. So notice here, Thursday, Monday, Friday, confirmed Hindenburg Omens. Notice here, you had a Hindenburg Omen. Hindenburg Omens confirmed, and the market sold off. I could go back in time and show you over and over again. So this is sitting in my head, and it makes me a little bit concerned. Now, to be fair, most of the damage appears to be coming from the NASDAQ, not the NYSE. If I look at just the NASDAQ, it's confirmed the NYSE has a single one. This is a composite index of U.S. stocks. Now, traditionally, the Hindenburg is calculated only on the NYSE. I question whether that's because that's the only index that reliably went back far enough that was broad-based. Whether or not this leads to a sell-off or not, I've learned over the years to at least pay attention. If we look at Friday, this is Nick Drendel's spreadsheet, you could see that the markets were modest moves. You could see they, for the most part, finished in the lower part of their range, which is not bullish. We could see, interestingly, despite that, the new high, new lows looking 1, 3, 6, or 52 weeks are actually positive. You don't see markets making gains when the new lows are way outplaying the number of highs. Better on the NYSE, and you could see the week was led by cannabis and energy, explorers, telecom, China, crypto, and the laggards were home builders and discretionary. Now, what's interesting is the white is the rates, and the yellow is the S&P, and they're going up in tandem. I'm a little bit surprised to see that because much of the market rally, I think, was driven partially by an easing of the rate. So that's something that we'll be watching. Is there a recession in the near future? I always like to ask that question. There's no answer. There's always a recession. I guess the concern might be that 10 minus 2 is about to cross the zero line. And if it crosses the zero line, we can see with the gray lines that the recessions occur after the inversion is corrected. Now, the 10-3 is nowhere close. If we look at the Philadelphia Fed diffusion, we're above the minus 20, and most recessions start from below minus 20, so that might go against a recession until we see a slowdown perhaps in the economy. And if we look at tightening of credit, which typically spikes during times of recession and weakness, there's no spike. I showed this last week, and I remain concerned. As we look at the amount of personal savings right now, it's pretty darn low, yet the amount of household credit keeps getting higher and higher. At some point, this slide tells me that the consumer is going to stop spending. When that happens, what happens to this market? I think it's something to be aware of. It doesn't mean it's going to roll over tomorrow, but I think it's something to at least think about. Short-term overbought, well, we improved a little bit, stocks over 200, stocks over the 40, but I'm concentrating here on the 21, the 13-week new high low on the markets. And when it gets up to this top line, the markets always either go sideways or pull back, and it's approaching that. Buckets, as I said before, neutral, no signal. Hindenburg, here you can see the multiples confirmed on the NASDAQ. Here was one back on the 16th on the NYSE, has not yet been confirmed. You notice on the NASDAQ you still see new lows. You don't see many on the NYSE. And without an increase in new lows, you're not going to see the Hindenburg. Broad-based week, it was a broad-based week. In fact, if you look at the things that are on the bottom, shorting candidates were down. Well, that's good. You want them to be down. Trade station sells were down. What's interesting is the canaries were also down, not down much. So there was a lot of movement, but it wasn't some of the big cap tech. In fact, this was a week where big cap tech and the overall markets moved about the same. And if we look over here, looking at ERG EPS rank plus relative strength rank plus group rank, compared to performance, you could see some of the bottom fishers had a big move, but it was a pretty flat move across the market. Now, this week is really a week to know your news and earnings. Why? We got employment numbers in, but most importantly, we've got a Fed interest decision on January 31st. I think the money is on absolutely nothing happening. I think it's going to be more looking at verbiage around when we expect to see either quantitative tightening stop or the first rate cut come into the markets. We got employment thereafter, including payrolls, monthly unemployment data or employment situation on Friday. The other thing we have is a massive amount of earnings. As I said, this is the first of several weeks, and we got some big boys this week. Whether you're looking at energy, um, Super Micro SMCI has been a big mover in the AI play at AMD, Alphabet, Microsoft. You got some airlines, JetBlue. Um, we've got Apple and Amazon and Meta. Here's some of the big cap um, energy stocks on Friday. So it's a busy, busy week. And as I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So we logged gains this week, which brought the S&P 500 to a fresh high. Gains were broad-based. Markets somehow, and surprisingly perhaps, withstood earnings disappointments and sell-offs, either earnings or warnings going forward. Tesla, Humana, 3M, Johnson & Johnson, AT&T, DuPont de Nemours, Procter & Gamble. We did get Goldilocks data, GDP stronger, inflation numbers weaker. To the downside, there's lots of layoffs, and I called out those Hindenburg Omens. This week will be data influence with both news and more earnings. I'm still long the market. I don't like shorting at all-time highs. I looked at 1,000 stocks over the last 24 hours. Still a lot to like on the long side, and we'll show you some of them. But there's also a lot to like on the short side. And I think what I learned, if anything, is this is not a time to be aggressive. I think it's a time to be cautious, not just because it's earnings, but those Hindenburgs. But it doesn't mean I'm going short the market without the market starting to fall. Again, daily markets analysis at stocksanddocs.com. So this concludes the PowerPoint. Let me end the slideshow. And now what I typically will do is I'll go into wealth charts and take a look at the market. So I like to start, well, it's the weekend, so let's look at the weekly market simple timing model. It's been long since November. It is still long. For those that are new, I look at price above a 30-period WMA and my weekly bongo. If both of those are bullish, the market's long. If both of those are bearish, I'm short the market. And if they're one way and one the other way, it's a neutral signal. Now, I don't always look at the dailies, but just to show you the dailies and just to emphasize the less than perfect market we're in. The Russell's close to the WMA on the daily. It's bearish on the bongo. The diamond, despite the fact that it's a leading index right now, is also bearish on the bongos. It's gone mostly sideways. So I would say we're mixed bullish. And again, with the upcoming news, I'm a little bit careful. Kind of a week of two trading ranges. Monday we gapped up and went sideways Monday and Tuesday. Wednesday we gapped up on news and went sideways Wednesday, Thursday, and Friday. In fact, if you look at where we closed on that first bar and where we closed on the last bar Wednesday, Thursday, and Friday, it's basically at the same point. So I think the market is pausing here and waiting to see the news, especially hearing what the Fed has to say, and are they going to give us any clues and maybe suggest that they're more willing to cut in March like the market wants versus May or later, which is what the Fed has talked about. I'm afraid we're going to hear more of the higher for longer comments, and we'll see how the market reacts. So if we look across the indexes, I think you're going to see pausing. You see clearly on the daily spiders, a doji indecision bar. Doesn't mean it's got to go down, doesn't mean it can't go up. Indecision, but kind of pausing here. You look at the Qs on the daily, kind of a little reversal, filling perhaps the gap up here. At best, I'd say consolidation and a pause. I think we're pausing, although we did have a positive close on the diamonds. Certainly pausing, consolidating here. And this is an interesting point. So I pointed out on my teaching class that I did on, I think, Wednesday night. We've had two Darvis boxes to me over the last couple of years in the Russell. Here was the one that we went into in 2021, and we stayed in the whole year. We had the fake breakout, and then the market began its big sell-off. Well, geez, I think we're in another Darvis box here, and we had a fake breakout here just like we did here. So I'm really curious whether that's just an anomaly that I'm overreading, or is that telling me more information to be concerned? We'll find out over time. Don't have to make it all the decisions um, today. Let's see, is that going to be Friday? Perfect. If we look at the VIX is low. And if we look at the weekly VIX, you could see on the week it was down a little bit. And if we look at the dollar, speaking of consolidation, it's a little stepwise moving, but it's really consolidating. On the commodities, the dollar's consolidating. Gold has come down and sitting on the 50. Silver is weaker than gold right now. Oil has broken above the 200. There are some people that think this is going to run to 80. Why not? Um, it really depends on supply versus economic growth. Natural gas, this is a split occurred in here, so I'm not paying much attention to it. It's really hasn't changed much. It was a 4-to-1 split. And then the 10 years also consolidating at an interesting point where you have the 50 about to cross below the 200. So I see a lot of hesitation here. The VIX down less than 1%. The dollar consolidating. The 10 years, yeah, it's really consolidating. I think the market's waiting for the news, don't you? If we look at the market indexes that I like to follow, what I do is I have a number of tools to look at the markets. One thing I do is I create ratio charts of all the sectors compared to the spiders. Now, a quick aside, to those that own my marketplace package on wealth charts in the owners area for my package, I have placed a bunch of industry or sector group symbol lists as well as all of my layouts that I used on the Wednesday class. So I'm looking for two things. I'm looking for strength in the upper right hand corner. So technology, look at this. It's weakened. Holy Toledo, that hasn't happened in a long time. The strength, the winner on this weekend is financials, excuse me, communications. Financials looks good too, but communications is the big winner. So right now it's about communications. And let's just go through materials weak, energy starting to improve, financials improving, industrials weak, technology has been strong, weakened a bit, staples, real estate, utilities, discretionary and healthcare, maybe they're making a bit of a move, but they're all pretty weak. And then the LABU is sort of holding steady. So right now, it looks like the big winner is communications. Now, let's look at my stock scanners. And let's kind of look first at the heat map of the S&P 500. And you could see a mixed picture at best on Friday. I wish we had a time frame to look at the week, but you could see some of the big cap tech names led the market down. If we look at the wealth scanner, which is one of my favorite tools in wealth charts, you can rank anything, and you're kind of, to me, you're ranking it by their version of relative strength. And I'm looking to see what industry groups and sectors are leading. Now, you never want to see bond funds at the top or short bond terms. So you have bond funds up at the top. So that is not great for the stock market. You also have only three things above the 800 level, and one's an MLP, which is a kind of like a bond equivalent in that typically these pay a decent dividend. I've talked about ET, which is the one that I own, so they're doing well here and maybe even going to break out of this congestion. I've got momentum. I have spiders. That's interesting. S&P 1500. Communications. You can see the leadership there. Core S&P 500. Financials. Fidelity Magellan. Short treasuries. Short duration bonds. Russell 1000. Large caps. The largest the largest 1,000 stocks of the market. So financials, and you know what's missing? All the technology ETFs that were here. So we said energy, communications, and let's take a look deeper. Now, how do I slice it from here? I go to my CAT scanner. My CAT scanner looks at my favorite signals. It looks at squeeze, it looks at dots. Well, the dots represent four different signals: a gap, volume, breakout, or momentum. The more dots I have, the more likely that something's going to move. The green candle low and red candle high are single bar reversal signals. The Bongo daily and weekly is something I developed with a bunch of my friends probably 15 years ago, and that's a trending indicator. It allows me to look for stocks in uptrends, downtrends, reversals, etc. The high-low jump is a derivation of Ian Woodward's high jump, which is looking at extension to the upside or downside. And then the EMS is an algorithmic signal that's sort of a short-term signal that shows up as a triangle on these charts. So I could go to communications, and I like buying pullbacks and uptrends that start to move up again. So I'm going to leave it on pullbacks and uptrends, and I'm going to see if anything has dots. And these are the stocks that met my criteria. Now, if I look at, let's see, I just want momentum. This would be all the communication stocks that have dots. Turkcell would be one of them. And this is one that's breaking out to recent highs. It's a cheap stock. And down here, I look at the high jump. It's at 78. It's actually not extended. So if you wanted an international telephone company, I don't know if they pay a dividend. I don't know this one well, but massive volume on Friday, and it had a gap. I know that from the dot. Volume. It broke out above chop. It's got momentum. And then down here, this is the high-low jump. This is relative strength versus a moving average. This is OBV. So this stock looks great. Kind of a cup, handle, another handle, and a breakout. So that might be something to look at. But I'd rather have things that are not have not moved already. And that's why I like to limit mine to what I call pullbacks and uptrends. And let's see if we can find anything interesting looking at my pullbacks and uptrends. Airbnb. So how do I know there was a pullback here? Because I asked it to show me stocks where the weekly bongo, the weekly trend, which is the middle one, has been a long-term uptrend, and that the short-term bongo had stubbed its toes and pulled back. And so and I've asked for it within 9 days. This was 5 days ago. It flipped. So we had on Friday volume, breakout, momentum. We just came out of a squeeze. We're not extended. We're at 57%. Above 95 is concerning. Relative strength broke out, as did OBV. So I like Airbnb. So here I am. I've looked at the markets. I'm cautious, but I'm still cautiously bullish. I looked at what industry or sector is leading, and we said communications. And then I went into the communications list, and this came to the top. So it's a top-down look. Warner Music Group. Don't know much about this. I don't know why it's communications, although maybe television, radio, or yeah, I guess television, radio are part of it. Nice uptrend, little pullback, and a move here. Okay, I know one that I liked was Comcast. And now Comcast has already had its move, perhaps, but it's only at 63%, so by the numbers, it's not extended. And when that number says 100, that means it's most it's been extended compared to the last 200 bars. Since it's saying 64 or so, it's telling me that that 36% of the time in the last 200 bars, or it's 64% of the most extension, so it could get more extended. So I really liked it the session before. Notice my well signal fired early, which it has a tendency to do. But look at the big move here. You had, in the last 2 days, you had volume twice, a breakout momentum coming out of a squeeze, relative strength OBV, not extended. So Comcast made my list. Telephone and data systems, don't really like the fact it closed in the middle, but here's a nice move. I don't know if I'd call that a cup and handle because the handle's too low, but notice volume, not extended, relative strength OBV, and over the last 2 days you've had a bunch of green dots from that squeeze. So one way to start is to just look at those sectors. We said that financials and I think energy are the ones I liked. So we'll look at financials, the same question, and we'll see what kind of pullbacks we have. Now American Express had a massive, I think this is on earnings, and you could see a gap up. It got extended, so that's one thing to be concerned about. You could see how much it's run on the weekly. But American Express really looks great here. Massive volume, gap volume, momentum. The breakout was, I believe, I guess it would have been on this bar, it got the breakout signal. Look at relative strength in OBV. Federated RMA, it's still below the 200, or well, it's right above the 200. Might be something to watch. Bank One was another one that looked really impressive, breaking out. Love the volume, momentum, broke out a few days earlier, relative strength OBV, and not overly expected. I did look at global payments as one that looked like a decent setup because here's sideways move, pulled back, just switched to positive. Look at relative strength in OBV, and it's got a couple of dots. That one looked impressive as well. Western Alliance is one that I've liked for a while, kind of setting up here as well. And then the third was energy. So the beauty of this scan is it's bringing up the stocks that I want to see, pullbacks and uptrends. Now there's not a lot of dots here, maybe because it's just beginning to move off the bottom. But I actually liked CVI. And in fact, a bunch of the refiners made my list this week. And you could see in a downtrend, a reversal, look at relative strength in OBV, not extended. But CVI, I mean, Valero looked good. Here's one. Breaking out. And then MPC was another one that I looked at. Now, on the services side, one that I liked was Halliburton. This is one that's been going down for a while, as you can see, as energy has languished. This is one of the big daddies, and if energy continues to break out, Halliburton could be interesting. And then you also had, here's that MLP that I like, which, you know, it's been in a steady uptrend for a while. It pays about an 8% dividend, breaking out here. Actually looks quite nice. AROC has been a big winner on the services side, also showing up on the list. Now, from a top-down perspective, I just gave you plenty of things to look at to the long side. We could look perhaps at my combo list, which are a bunch of strong fundamental and technical stocks, and see if anything else gives us additional opportunities. And so ALV, Autoliv, don't like how it finished. Big reversal after the gap, although it still finished positive, worth watching. Appfolio, beautiful day on Friday, but look at the extension. This one, you know, I bet it goes more. Powerful move. But this is the kind of thing that I expect to do this, and then a break higher. And I don't want to buy it until it breaks out. It may go up and gap again. Maybe it's a news story, but that was a heck of a move. One we talked about last week, or I talked about it Wednesday perhaps, Booz Allen. I mean, I had drawn the line, and it broke out here on, I think I did this on one of my Stocks and Doc videos. What a great opportunity that was. Breakout from resistance, couple days consolidation, and a big gap on volume and earnings. What a move. It's now extended. So Gentex, interesting bar there. There's Airbnb, American Express, Colgate, Palmolive. Staples have not been strong, but here's a staple, a nice uptrend, a little pullback. Here's the bongo came in a squeeze with a couple of really nice days in a row with volume, breakout, and momentum. Relative strength and OBV look good. Looking at other things that look good, this is ALPN. This one has had a big move, probably getting a little bit too far, but this one looks really powerful. This is Alpine Immune Sciences. Going down my list, some of the shippers starting to look good. I read where all the stuff with the Houthi rebels is good for the shippers from a pricing perspective, and you could see Frontier looking like it's getting ready to break out here. Insurers, AIG, their power finance have been strong for a while. So a lot to like to the long side. Now I mentioned to the downside. So what I can do is I could go into my weekend bears, which is just a list of stocks that showed up on negative watch lists. And instead of looking for pullbacks and uptrends for things that are going higher, I can actually look for retracements in a bear market. And there were quite a few things that looked interesting from a negative perspective. Badger Meter, expensive stock. Got to do your homework. But boy, what a breakdown from squeezes are great, but we don't know which way a squeeze is going to resolve. Now, after a move like this, what I ultimately want to see is I expect to see it drive up a little bit, run into that 200 and break down. So I would play the breakdown from a retracement, so I'll be watching for that. Casey Stores, look at this, another break. Same thing. When I take out a major moving average, my target has got to be this one here, which is quite a ways down. But I'd like to see it retrace back up to that 50 and fail. Intel, this one was been doing great until earnings came out and they warned going forward. Similar story. My target might be that 36 range. Is it going to retrace first? That would make me happier. And notice what's occurring here. The opposite dots, negative or falling high jump, relative strength weak, OBV turning down. LSCC was another. So I actually have a list of stocks that I thought would be that I'd want to watch and see what happens. Now these have not all going to give signals. These were based on the chart patterns, and I typically like to see retracements before I short. So ADP was actually up on Friday, but this one is pulling back. Obviously I wouldn't be shorting it yet, but a breakdown below that 200 might be interesting. ANSS, this one looks like it's stair-stepping down. It's sort of retraced up to the 17. AVGO, man, you don't want to short all-time highs, so I'm not advocating, but this one broke down. BlackRock, is this thing ready to break down? Well, it's got a lot of these are not shortable yet. It's got to break down below that 50. CrowdStrike, another one, is it reversing here? This is what perhaps why I might be a little nervous about tech in the short term. Equifax hasn't broken down yet, but this is a watch list. This I put together so I can watch what they do over the next couple of days. One, because they might give me a shorting. This one's already gone. This was on my list last week that had horrible earnings. One, because it might give me an opportunity if it retraces, but I'm looking for a sign that this market's breaking down. And I put together a basket of stocks that I think are potential to go down. And if they start to move, that gives me a signal about the market. Some of these semiconductors. Now, the problem with shorting this is it's got the 17 and the 50. But look at this somewhat island reversal, evening star type of a pattern here, breaking down. LRCX, similar, another semiconductor play. McDonald's broke down below the 17, the 50, and the 200 are there. But boy, imagine if it breaks down below the 200, how far I could go. Motorola Systems still up at the top, but looks like it might be rolling over. NXPI, they do a lot of, I believe, automotive semiconductors pulling into the 50. This could be free parking and a good buying opportunity, but I'm just going to watch and see if it breaks down. S&B Communications, this one is economically sensitive, and we'll see if this breaks down here below the 200. Right now it seems to be holding. And then Sherwin Paints, if the housing industry does weaken, and we did see some things weaken this week, it's probably still a little early to say they're rolling over, but you could see D.H. Horton, Toll Brother had look like they may have topped. So again, I'm not shorting those. I look for stocks that are giving me signals on the day to take the trade. But I like to put together what I call a screen. And then I look at that screen in the market, and if it's all red, it tells me something. So I have buy watch, I have sell watch, I have some things like the combo that run in different screens during the session, and then I use my CAT scanner at night to sort things out. So let me just put it all together, then I'm going to say good night or goodbye. First thing, I think this is a week of volatility, and the market may do very little until it sees the earnings Tuesday, Wednesday, Thursday, hears the Fed decision on interest rates, and sees the Friday employment numbers. If everything goes the way of the bulls, soft, Feds are soft on their statement, but earnings are okay, then I think this market goes higher. However, I think we are set up for disappointment. And if we get that longer, higher for longer commentary, if we don't like what Powell says, think about those Hindenburg omens, thinking about what's happened in the past. I think you got to be aware the market can always go up or down. But I think in this week, you got to be aware that not only can go up or down, but the magnitude could be considerable. Have an awesome week. Thanks for putting up with my rantings and ravings and occasional funny noises that come out of my sinuses. That's for my son. And we'll see you next week or on Monday in stocksanddocs.com. Thank you.